Want to invest in low-risk broad index funds and actually get meaningful cash deposits into your account monthly? Sounds too good to be true? Well, this video is for you because I'm a former Wall Street professional, and today I'm going to break down 5 powerful index funds that are designed to pay you cash monthly. I'll discuss how they work, what the risks are, and exactly how much you could realistically make monthly simply by investing and doing nothing. And this is not some secret investing strategy. Anyone can do this at home. So hit like and subscribe as I post easy personal finance tips to help you get ahead financially. Before we jump into the list, let's quickly talk about what exactly is an index fund. At its core, an index fund is just a basket of investments. So if you buy an index fund, you're buying a fund that already holds dozens, hundreds, or even thousands of investments instead of picking individual stocks. Think of it like this. Instead of investing in one company, you're buying a small piece of multiple companies. For example, an index fund tracking the S&P 500 owns shares of 500 of the biggest companies in the US. So when you're investing in it, you're investing in all of the 500 companies in the index, which means you are instantly diversified. There's no guessing, no stock picking, no trying to time the market. You're just riding the overall growth of the index. Now, traditionally, index funds are built for long-term growth. You invest, you hold, and over time, your money compounds. But the funds we're talking about here take the idea and then tweak it. Instead of just growing in the background, they're designed to actually pay you along the way. So let's talk about those index funds that basically tip you along the way. Not very many people know about these index funds that pay you monthly. Most traditional index funds, they pay dividends once every 3 months. That's great on paper, but your rent, that's monthly. Your bills, well, that's monthly. That mismatch matters. Monthly income solves that by structuring payouts to hit your accounts every 30 days. Now, they don't all do it the same way. Some use options strategies, some use bond interest, others combine both. And ultimately, you don't even really need to know what options and bonds are, but the end result is essentially the same: consistent monthly cash flows. Well, the trade-off? Higher monthly incomes usually means you're giving up something in return. Sometimes that is growth, stability, or maybe you're just taking on more risk. So let's break that down, the 5 index funds that actually pay you cash monthly. And I'll explain it in simple terms what you're actually signing up for, starting with the fund that pays you the most monthly. This is the highest paying index fund on the list. It is the JP Morgan Nasdaq Equity Premium Income ETF. The ticker for this is JEPQ. We're talking about roughly 10 to 11% yields, which means if you invest $10,000 into it, you will make approximately $83 per month for simply just holding onto it. Here's how it works. It holds major Nasdaq stocks, which in other words are big tech names, then sells covered calls on top of them to generate income. That extra income, well, that gets paid to you. Simple. But here's a catch. When those tech stocks take off, these funds don't really keep up the same way. In other words, you're trading growth for income. If your goal is to cash flow today, this is powerful. If your goal is to maximize long-term growth, this might actually hold you back. In other words, you're getting cash today, but the trade-off is that when the Nasdaq stocks go up, you get less upside. You make your choice. The second most highest monthly paying index fund is the JP Morgan Equity Premium Index ETF. Think of this as the more balanced version of JEPQ that I just talked about. Instead of heavy tech exposure, this index fund leans into the S&P 500 companies, more stable, less volatile. And this fund yield sits around 8%. In other words, if you invest $10,000, you will receive about $67 per month. Still strong, still monthly, but with smoother swings. This is one of the most popular income ETFs for a reason. It's not extreme, it's not flashy, and it just works. If you're building a core monthly income position, this is usually where people start. Number 3 on the list shifts away from the stocks. SPHY actually invests in what's called high-yield corporate bonds, also known as junk bonds. That sounds kind of scary, but here's the deal. These are the companies that need to pay higher interest to attract investors. And that higher interest, well, that gets passed on to you. The yield on this fund is about 7.4%. If you invested $10,000, you would get approximately $62 every month. But here's the risk. If the economy struggles, some of these companies can go bankrupt. That can drag the fund down. Well, the good news, it's spread across hundreds of companies, so no single failure destroys everything, and you probably won't even notice it. Number 4 on the list is USHY, which is very similar to SPHY, but bigger and more diversified. We're talking over 1,000 holdings, all in one index fund. That means it's less risk from any single company and smoother overall performance. The trade-off, because it's a safer investment, there will be a slightly lower yield around 6.9%. That means if you invest $10,000, you will get approximately $58 per month. Think of this as the safer version of high-yield bond investing. Last but not least is one that is the most unique of them all, PFF. PFF invests in preferred stocks, which is just another type of stock. These sit between regular stocks and bonds. They pay fixed income, often monthly, and get paid before regular shareholders if something goes wrong, which means it is a safer investment. So the yield is actually around 5.9%. So if you invest $10,000 in PFF, you can expect to make approximately $49 per month. Lower than the others I mentioned above, but it is more predictable. The main risk though, interest rates. If rates go up, these can drop in value. So the fund tends to perform better in stable or falling rate environments. Let's make this real and put this into a table for you. At around $25,000 invested, these funds can pay you anywhere between $123 to $219 per month. At $50,000, these funds can pay you between $246 to $438 per month. At $75,000 invested, that's $369 to $656 per month. And if you've invested $100,000, these funds can pay you between $492 to $875 per month. And here's what people miss. The difference between 5.9% and 10.5%, that doesn't sound huge, but at scale, that's hundreds of dollars every single month. That could be your groceries, car payments, daycare, or even helping you save for a down payment for a house. But here's the warning. High income doesn't mean better. If a fund pays you 10% but drops 15% in value, you didn't win. You just got your money back. But if an index fund tracks a large bucket of stocks through time, the market generally goes up, which means if you stay invested, you'll be perfectly fine. Remember, these are income tools, not wealth building machines. So if you're younger and focused on growth, you probably want traditional index funds. But if you're trying to build side income, or you care about cash flow more than growth, or you simply just want money working for you now, these become incredibly powerful. And the smartest investors don't choose one over the other. They invest in a mix of things where some funds are focused on growth and some are focused on cash flow, which means they are building growth and layering income on top. That's how you create a portfolio that doesn't just grow, but actually pays you along the way. Alright, so that does it for today. I hope you learned something new in this video about index funds and perhaps can now think about investing in index funds that can help you generate side income. And if you like this, please do me a favor and like and subscribe to my channel and check out the free personal finance tracker I created specifically for my viewers. I put a link to it in the description below. And tell me, did you know that index funds can generate you meaningful cash monthly? Let me know in the comments below.